Hello, you've tuned into State of South Asia, a podcast from Himal Southasian, where we have the best minds on the region to unpack crucial issues affecting our politics, cultures, environments, and societies. I'm your host, Nayantara Narayanan. Himal is an independent magazine completely free of government and corporate interest. Support our in depth South Asian journalism by becoming a paying patron. Visit our website and click on Support Himal. You can become a patron for as little as $5 per month. On April 2nd, the US President Donald Trump announced a set of import tariffs that shook up the global market. Calling the day Liberation Day, Trump announced the imposition of an immediate 10% baseline tariff on imports from almost all countries on the pretext of eliminating trade imbalances. The Trump administration applied higher rates to countries with which the US had the largest trade deficits. Trump called the measures reciprocal. Since then, the US has announced different tariff rates for different countries and also on various sectors. The US first set a 3-month deadline for countries to either make trade agreements with it or else the tariffs would be imposed. Earlier this month, it proposed a new set of tariffs on at least 20 countries, which was actually a revision of the older announcements. And these countries included Sri Lanka and Bangladesh. The Trump administration is threatening a 30% tariff on all goods imported into the US from Sri Lanka and a 35% tariff on goods from Bangladesh. It has announced a new deadline of August 1st. Trump's strategy, of course, has had global ramifications. South Asia's economy, like much of the rest of the world, has been sustained and has grown due to access to the US markets. Sri Lanka and Bangladesh's garment sectors, both huge exporters to the US, are likely to be the most impacted. Trump had earlier announced a 26% tariff on India and 29% on Pakistan, but both countries have been in trade talks with the US since then. And the outcomes of those talks are unknown and the impacts are uncertain. In India, there are worries over agriculture, steel, aluminium, and pharmaceutical exports. Now, to discuss the impacts of the Trump tariffs on South Asia, I'm joined by Umesh Moramudali, an economist and lecturer at the University of Colombo who works on debt, international trade, and political economies. Umesh, thank you so much for being on the podcast today.
Thank you for inviting me, Nanitara.
So, Umesh, first, just the overall picture. Trump has kept the global economy on tenterhooks ever since he announced these tariffs in April. What do you think has been the biggest worry in Sri Lanka, in Bangladesh, and in other South Asian countries over these past 4 months?
I think the biggest worry is how this is gonna affect the exports of these three South Asian countries and of course India. Because the reason is none of these countries do exceptionally well in terms of exports. We are not the level of exporters as much as China or South Korea. We are not like trade hubs like Singapore. So for most of these South Asian countries, it's largely some of the material, maybe the agricultural products. In the case of Sri Lanka, Pakistan, and Bangladesh is largely apparel. Then you have some rubber products, so on and so forth. Right. So for these products, US is one of the major markets. In the case of Sri Lanka, 25% of Sri Lanka's exports goes to the US market. That's the single largest market for Sri Lanka. Dynamics remain same for Bangladesh and Pakistan as well, particularly in the apparel sector. In all these three countries, roughly around 30% of their total apparel exports, I think in Bangladesh it's more, goes to the US. So there's an immediate concern from economic perspective. If the orders are halt from the US end, that's firstly the first thing that's going to happen is that's going to reduce the revenue that is generating for the companies, right? So then those companies will have to accordingly plan what they're going to do. Are they going to produce as much as they used to produce in the times before? And then that adjustment, right? So the moment that this adjustment comes firstly in the form of reducing orders. Let's take like average, maybe there was 10 orders from US. Now US company that is selling in the US doesn't know what's going to happen. and they might be reluctant to place orders for the companies in Bangladesh, Pakistan, India, Sri Lanka that produce these things, right? And when that happens, those companies will have to immediately adjust to that, right? So, firstly, that shock has to be absorbed. And when that shock is absorbed, there could be job losses, there could be contraction of economic activities, particularly in these areas. And it's not only the job losses itself, because in the case of apparel industry, these are heavy industries in the sense in these countries, like one of the biggest industries in South Asia. So there's an ecosystem built into that. In the closer to the apparel sector, there are people who provide transport, there is financial services, there are many families depending on it, food services, so on and so forth. And that will feed into that whole ecosystem as well. So, right, that's from a more general perspective. Then the other concern, which I think is a bigger concern for countries like Sri Lanka, also in the case of Pakistan as well, is the fact that this we are talking about dollar revenue. That means we are talking also about the balance of payment. South Asia is generally has a very volatile uh, situation pertaining to the balance of payment, except with the case of India. Both Bangladesh, Pakistan, and Sri Lanka, in fact, has defaulted, has done the worst, have very volatile balance of payment. So whatever that affect the export significantly, gonna have a hit on the balance of payment. So those are the two immediate concerns that South Asia will have to deal at the moment.
Right. And so just to put in perspective the current rates that were announced, Trump had initially announced a 44% tariff on Sri Lanka, which was one of the highest that was announced by the Trump administration, and 37% on Bangladesh. In the latest set of announcements, that has come down to 30% for Sri Lanka and 35% for Bangladesh. But that still is, in Bangladesh's case, more than double the existing tariff, which is about 15%. Now, both Sri Lanka and Bangladesh's vulnerability comes from these, huge garment exports. About 40% of Sri Lanka's apparel is exported to the US. And the US also accounts for about 20% of Bangladesh's apparel exports. Both countries face competition from Vietnam. And on Vietnam, the US is proposing a significantly lower tariff of just 20%. How does this play out for garment manufacturers in Sri Lanka and Bangladesh? And what is, again, the impact down the line from the garment manufacturers and into the economies of these countries?
Right, yes. I mean, so I'll break this question into two. Firstly, what is
Hmm?
going to happen in the short term? Because I think the short-term impact and long-term impacts could be very different. Because remember, we are dealing with a very sort of unpredictable scenario. Like we really don't know how Trump administration or the President Trump himself is going to react to this. Like, it's very unpredictable. Generally, we consider US as one of the countries that has predictability in terms of dealing in negotiations, in terms of dealing with businesses, so on and so forth. Now, right now, the question is that predictability is there no more because in the way that President Trump approaches the question. So no matter how much we discuss, no matter how much of planning going on here in South Asia, it's incredibly difficult to predict what's going to happen in the US because these, as you mentioned at the beginning of this interview, it's reciprocal, right? So the origin of these tariffs is not here. It's not about what we do. It's what's happening in the US, right? Because they have a trade deficit and they want to eliminate that trade deficit with all the countries. That's the underlying intuition, right? So in terms of that, there is nothing much that we or any other country could do, right? So when we discuss this, I think we have to discuss that, keeping that in the mind, and maybe if Trump change his mind somewhere down the line, all of this might be revised, right? So in terms of short-term and long-term impact, in the short term, as I mentioned before, what will happen is there will be a drop of demand in the short term because because these are not immediate these goods are not for immediate consumption, largely the apparel sector. So I'm focusing heavily on that because that's the industry that's mostly affected here. And in the case of Sri Lanka, rubber. These are consumption goods that obviously have some stocks and inventories for a certain period of time. So it's not going to impact heavily if they delay the orders for a couple of months. that the businesses in US are able to do that, right? And with that, I think there'll be some delays and reduction of demand for South Asian countries, and that will obviously keep these companies in South Asia thinking how they are going to approach it, so on and so forth. But in the longer term, because I think you brought the point of Vietnam. Actually, not only the Vietnam, there are other some South Asian countries, East Asian countries, and also there are African countries. There are some apparel
Right.
manufacturing that is now being shifted to Africa, which had actually a much lower tariff than South Asian country. Now, then the question is, in the longer term, if these companies that are already located in South Asia, remember some of these companies already do have branches in Vietnam, in countries like Ethiopia, Kenya, so on and so on. They already have a footing,
Mm.
right? So for them, it's about making sure that they keep getting orders. Right? For them to keep getting orders, they have to make sure that they have the lowest possible cost. And they could have the lowest possible cost by migrating their operations to those countries. Of course, those countries may not have the sophisticated system that are rightly now available in Sri Lanka and even in Bangladesh or Pakistan. But the significant difference of tariff might motivate those companies to move their factories to those countries in the longer term if the tariff persists in the current form. And so, in longer term, we are potentially looking at some of the apparel companies, even if their origin is in India, Sri Lanka, or Bangladesh, some part of their operation could move to, let's say, Vietnam or even to African countries. So then what we are talking about is essentially job losses, particularly the unskilled or the ones in the lower end. Because I think the ones
Right.
in the middle management or the upper management, those jobs will be retained, and they would require those people to run the operation whatever the country they shift operations to. So they might take that
Mm.
risk and take them to make sure that the smooth operations run smoothly. But that's different for the unskilled labor. So the impact for them would be much more. Their jobs would be at a higher risk. And the other impact is going to be, okay, as I mentioned earlier, that's going to be a significant revenue loss in terms of revenue loss in the sense loss of US dollar income that's going to feed into the balance of payment. Um, how I would look at this is, again, as I mentioned, when I start answering this question, it's very difficult to predict what's happening. And the best course of action for the long term is actually to diversify the market rather than reduce the reliance on the US market.
Right, and we'll come to that in just a bit. But Umesh, just focusing on Sri Lanka for a moment, we spoke about the garment sector, you mentioned rubber. What are the other sectors that you think might be impacted by these tariffs?
Actually, in Sri Lanka's case, those are the major sectors because we heavily export garments and rubber products, some modification with rubber products to US. There is some other seafood and so on and so forth, some amount of tea, but those are not like significant amount of exports that goes to US. And those sectors itself, they are not really heavily dependent on the US market. So for them, it's a very small market share that they will be losing. It's largely the apparel and the rubber sectors that will be affected in the case of Sri Lanka.
Sri Lanka's economy, of course, is still recovering. It has stabilized to a large extent, but is still recovering from the crisis that began in 2019. The IMF has warned about the impacts of the tariffs on Sri Lanka's economy, and it has said that the country must continue its austerity measures that were part of the bailout package that the IMF offered Sri Lanka. So, what does this scenario now mean for Sri Lanka's recovery, for its debt that it's still trying to pay off?
Yes, I think that for Sri Lanka, this is the biggest concern, and that is also where Sri Lanka's case significantly differ from other countries in South Asia. Because when the tariffs were hit, Sri Lanka has defaulted, and we are in the process of sort of economic recovery. We just completed the debt restructuring, so we are still at the recovery stage. We are not currently repaying some parts of our debt, only some interest we are not paying, which we are starting only in, let's say, 2028. Right? There's a whole technical side to it, but the point is we are still in the recovery phase, and we very much need to build our foreign reserves when our debts, when our debt repayments comes at a larger scale. Right now, we are paying a very small amount. We've got a lot of concessions as a part of the debt restructuring process. So there'll be much more burden to Sri Lanka from 2027, 8 or 29 onwards. So the anticipation is that by that time, Sri Lanka has to build a substantial amount of foreign currency reserves at its disposal to ensure that they can repay the debt without going into a default again. Right now, Sri Lanka's reserves sitting at around 6 billion USD. By 2028, this amount has to go more than 13 billion, close to 14 billion, right? So you have to build reserves almost, I mean, you have to double it and then build even more. And the key to do this is to have some substantial amount of exports, right? The scenario is you continuously have a substantial export revenue. When there is export revenue, dollars coming into Sri Lanka's banking system, and from that, central bank gets the reserves and build the reserves. Right? So this mechanism has to work smoothly for central bank to build the reserves and meet those reserve targets by 2027, 2028. Now, the question is, as you pointed out, as we discussed in this discussion, significant chunk of Sri Lanka's exports go to US. And that means significant part of Sri Lanka's annual US dollar income depends on the US, right? So even if there is a reduction of, let's say, one third of export revenue from US just lost because we lost our competitiveness with the tariffs, some people shift, and that would still amount to a substantial amount, maybe even like 500 million or $1 billion. So that will have a significant number. I can't give exact number on this, but what I can say is that will have a significant impact on Sri Lanka's ability to build the foreign currency reserves. Right? Then it becomes a question, okay, how are we then? Are we going to take more foreign loans? Are we going to discuss with the IMF and change the reserve targets? How to go about it? Right? So there is that challenge. I think that it is it's the same thing that the IMF has recognized in their last last program review, that this going to have an impact. But we don't know to what extent this will happen because of the unpredictability of this scenario. But during these few months, I think the things will get a lot clearer. And with that, Sri Lanka would have some understanding, okay, this is the level of impact that we will have in terms of export revenue to the US. And if that's going to hit, let's say, one third or something along those lines, then Sri Lanka will have to look at alternative ways to build the reserves, or to change the targets, or engage in further discussions with the IMF how to go about it, whether we can obtain more loans, whether we would need more support from the IMF or multilaterals, or whether we would need to go to the international capital markets and issue a larger bond, and how is that going to play out? So a lot of questions to answer on that, but it's not going to be easy if this actually hits hard.
Well, here's a quick reminder to our listeners. Himal has been covering South Asia for more than 35 years. We bring you cross border stories that you won't find anywhere else. It takes a lot to do this kind of in depth, independent journalism, and we rely on listeners like you. You can support the magazine by becoming a paying patron. Click on the link in the episode notes or go to our website, himalmag.com, and click Support Himal. You can also sign up to our newsletters to keep up with our latest stories, events, and more. Now, back to our conversation with Umesh Moramudali. Umesh, Bangladesh has also been in a period of flux as an interim government that is attempting to reform everything from its constitution to its legislature to its law and order to its banking system. Under Sheikh Hasina's Awami League government, Bangladesh was already facing high unemployment and inflation, one of the reasons for the monsoon revolution. And all that political uncertainty in the last year since Sheikh Hasina was unseated as prime minister has also led to declining in investment and financial instability. How do you think Bangladesh will face up to this tariff threat?
I think it's going to be equally, or if not more, even more difficult to them because One of the reasons why companies continue to came to Bangladesh was that although there were certain problems, the investment climate in Bangladesh was good. If you operating as a business, you make the connection to the government, you could operate smoothly. So that predictability was there within. It's a whole different issue whether that was the correct way to do things, etc., etc. But from a very business perspective, for a business or a company that looking at setting up export factory, that existing processes were somewhat helpful for them because they are profit driven. Right now, with this, with some of the uncertainties, and then also the political uncertainty, so on and so on, that makes Bangladesh even a less attractive investment destination. Because as I mentioned before, now the incentive is obviously to move away from countries that has higher tariff on apparel and go to countries that has lower tariff, right? And Bangladesh is in the higher end; they are now 35. Sri
Mm.
Lanka has some reduction, but still 30. But these are still higher numbers. And what is very little talk about is that how low the not only Vietnam, how low the numbers in African countries. And African countries also do have some apparel manufacturing, as I mentioned, and some of the companies that has factories in Sri Lanka and Bangladesh both, and even in Pakistan, they also have factories in those countries. As we discussed, right? So it is rather easy for those countries, or also for the new coming ones, to shift to such countries because you will obviously look at the political vulnerability and then the political stability, all that. And you're willing to take a risk on it if your tariff levels are lower, right? If you have
Right.
like a 10% tariff on that, you might take, because you can't take a double risk, right? Uh, Either you have to have a low tariff level and political stability, or you have to have high tariff level and high political stability, or something like that. So there has to be some incentive for the businesses. So I think it's going to be even more difficult for them. That's going to be a rough ride for them as well. And it also, of course, depending on how politically stable Bangladesh is becoming in the next few course of months. And I am not the best person to comment on this. I have to give that disclaimer. I'm not an expert of Bangladesh politics, but looking at from a more South Asian perspective and from a political economy perspective, that there's a tendency for the businesses to move away. And it is important that Bangladesh provide that clarity and a better investment climate if they want to attract these businesses. Because previously they had the luxury of getting these businesses. They've enjoying GSP plus and other kinds of concessions. Now they've sort of hit a snag, right? So it's difficult than before. Now the incentives that were there for the apparel manufacturing companies to come into Bangladesh are no more, or it's very much less, right? So now they have to readjust how to face this situation.
Right. And of course, it's not just the country specific tariffs that we need to look out for. Trump has also threatened sectoral tariffs, including a sky high 200% on pharmaceuticals, to try and shift, pharmaceutical manufacturing back to the US. Most key pharmaceutical ingredients are made in China. Generics come from India, almost entirely. If this does come into effect, if they do impose extremely high pharmaceutical tariff, how much will it hurt India, do you think? And of course, the rest of South Asia. And this second part of that question is, how do we look at these sector specific tariffs? Even if countries negotiate their own trade agreements with the US, is the sector specific tariff another thing that they have to contend with?
Yeah, I think so. First, on the impact on India, it's going to have some impact, but I don't think that's going to be severe as much as the case in apparel for Bangladesh and Sri Lanka. India is a larger economy with a huge domestic market, and this is pharmaceutical is not a very huge or most key item that India export to US, right? So, and even if India does not export to US, India still has big chunk of market for to export their pharmaceuticals, including Sri Lanka, including the South Asia and other countries. So there, yes, there will be an impact, but I wouldn't think that it is severe as the case of apparel to Sri Lanka and Bangladesh. in terms of how to negotiate these sectoral tariffs, I think it's important to look at the origin of the sectoral tariffs. If you see how Trump tried to impose a sectoral tariff, he's very concerned about certain strategic products or the industries, right? He's very concerned about, let's say now, in the case of China, electric vehicles or the vehicles in general. Now we see pharmaceuticals, and then you also see certain agricultural products, so on and so forth. So that's mostly also the domestic production and also sort of the food security, or in this case of some health security reasons, so on and so forth. Therefore, this applies to the same thing that we discussed before. It is originating in the US itself rather than outside the US. So there is very little you could do in terms of that sector to convince US that you should buy from us. That's not going to be helpful, because the idea is what Trump wants is, okay, if you sell this, you have to buy more from us, right? And then we see many countries trying to offer, okay, we'll buy this and that or the other. I don't think this is a sustainable strategy in the long term, because we are developing countries. Our purchasing power is much less compared to the US. And there isn't much products that we can purchase from US compared to the products that you would purchase from elsewhere. Because in US, they are selling different things largely to high-end markets, and we don't really have that much of a high-end market, right? And for example, I mean, it's in an average Indian would buy a car produced in India than buying a Ford or something that produced in US, right? Maybe an upper middle class or upper class one would be able to afford a US product, but that's not the case with the average people. Same in Sri Lanka, same in Bangladesh. So when one negotiate these things, yes, of course you have to focus on the sectoral tariffs. I think it depends on what each country's prioritized sectors are. For example, if the pharmaceutical is a prioritized sector for India, then that should be a priority item in India's agenda when they negotiate the trade agreements. Right? For Sri Lanka, pharmaceutical is not so much. For Sri Lanka, it's something like apparel and rubber products. So I think that depends on what each country wants, and that should certainly be a part of it, because if you get a general concession and then you end up being hit through a sectoral tariff, then it doesn't make sense for you to have a trade agreement, right? So in the trade agreement, each country needs to know what needs to be prioritized and make sure that that is not included in the sectoral tariff list. Your demand should be to exclude it regardless. Don't put it to the sectoral tariff levels if you are negotiating that, right? And I generally think that currently the ways in which negotiations are conducted, it's very abrupt. We are not talking about actually trade agreements. Trade agreements, whether it's bilateral or multilateral, it takes time, maybe year or year and a half, or maybe few years to negotiate and come to discussions. But those agreements are bound by the international law. You can go to WTO. Those are more coherent and those are more predictable. Those have clarity, all of that. When you make a commitment to a trade agreement, you all the investors and traders have that predictability that this country cannot do as they wish, because you have entered into an international commitment. You're bound to implement it. But the kind of deals that we see with Trump is not in that nature. Right? I think not many pay attention to that. Everybody say that you cut a trade deal, you cut a trade deal or trade agreement. This is not a typical trade deal, right? This is very abrupt. This is like you go to a market and you bargain in the market. You say, I will walk away if you don't sell me at this at 50. I recall this in few South Asian countries, I think in my country and in India. And I was in Delhi, I also remember. So this is something like that, right? So there's no basis for that. There's no predictability for that. You go to the same shop tomorrow, there's no guarantee that this person will give you the same deal next day, right? So I think maybe it's time for a lot of other countries to get together and ask for much more coherent trade deals, or rather trade agreements, rather than these abrupt deals, because these abrupt deals doesn't ensure anything in the longer term. This is a very informal, toxic arrangement that may or may not work.
Yes, that's the trade deals with the US. But you mentioned countries should think about diversifying beyond the US market. What is your prescription? What do you think at this point, particularly South Asian countries can do?
I think solution to this is not a short term one. There is no quick, easy fix. And there's no magic potion that you can't shift export markets in a jiffy, in the next month or so. It takes time. But I think we have not taken those actions sufficiently. India, actually, to a certain degree, India had taken actions. They had actually started getting into trade agreements. They've signed with trade agreements with multiple countries. But other countries, Sri Lanka in particular, we haven't really progressed that much. That's why we don't export much to China or for that East Asia, or even to India, we don't really export much. We could do a lot more. You would assume that India being the closest neighbor and the proximity, we would export much more to India than to some other countries. No, but that's not the case. So what I would say is this is a time for particularly one to South Asia to come together and try to increase the regional trade. This has been in the talks for decades. Many policy prescriptions, you started with SAPTA and then you had SAFTA. And because India is not happy to deal with Pakistan, you then have what you call APTA. There's whole different trade agreements, but again, much more predictable than what you would get into US because these all are in paper, right? I think it's important to look at these things more seriously and also to reduce the non-tariff barriers within our countries. We have to be more open with each other. And then also we have to be more open with East Asian countries. We don't really export much to China. There's a very big market in China. In the case of Sri Lanka, there's a very big market in India. So both these countries has a very fast growing middle class. I feel like that's where our opportunity lies. And there's a market there. And then this is the time for us to make those countries a reliable market, right? That's the entire South Asia trading more with each other, and South Asia trading with China and other East Asian countries. I think it's time that to look at this from a more economic perspective rather than from a political perspective. And there is enough evidence that these can be worked out. I mean, I'll give a very simple example from Sri Lanka. In Colombo, we have three major port terminals. Very recently, we opened one. Um, Adani holds, I think, close to 50% of stake in that. That is the West Container Terminal. There's another container terminal entirely handled by Sri Lanka, and the other container terminal which is the largest one, is handled by China. Right, so there is opportunity to work within these dynamics, and most of the containers that comes to India actually up to now, even after Adani terminal, some of it actually comes to the terminal handles by China. Right. So if you want to, because right now there's a different political economic dimension where US is actually trying to bully other countries, and I think it is time for these countries to come together economically. Of course, you will have significant political differences. I wouldn't expect those to be resolved, but for the purpose of having stable economies in the global south, in South Asia, I think it is important to make those connections right now and be more open about it. Because although we have trade agreements, we are very reluctant. Even in the case of Sri Lanka, we are very reluctant to have open trade with India. We have not been open enough. There's a lot of prejudice going into that, whether that would affect us adversely or so on and so forth. But I think this crisis should be used as an opportunity to break those barriers, particularly what you call the non-tariff barriers, because sometimes you say, okay, we are opening the trade, but then you put a different barrier saying, okay, because of this particular reason, you cannot come and work in Sri Lanka. Or because of this particular reason, you cannot export this product tariff-free to Sri Lanka. There are a lot, what you call a non-tariff barrier. I think those has to go away, and I think that it has to come from, the mindset change about the fact that we have to be dealing or trading more with each other and also with the East Asian neighbors so that we could not be affected significantly when a country like US imposes this kind of arbitrary actions. So for me, I think the what we see with Trump is the consequence, right? Or rather the symptom. Cause is very much there. A lot of you see in US politics, you see that they would want to deal with some of the Asian countries. So they have that reluctance. There's a growing resistance to this, right? So I think even if Trump will temporarily go away, this will keep coming and coming. I think for a longer term, the better way is to integrate in terms of economically and build a much more stronger region.
Umesh, a little more on the China question then. You mentioned the port. China has significant investment in Sri Lanka. Sri Lanka doesn't export much to China. China is Bangladesh's largest trading partner. Do you think there is a pathway there? Say, again, because we've been talking about Sri Lanka and Bangladesh, is there a pathway for these two countries to access China's market? And you said that they should do it, but do you see them actually going that way now with this US tariff regime?
So two sides of this. One is that businesses traditionally don't look at China as a attractive market. Traditionally, you think US, UK, or the Europe is the market it's a rich market where you can sell. But if you diversify enough, if you do products that actually can be considered, high-end products, you could sell those products in China. The thing is, you cannot really compete on price in China because in China the production costs are much lower than here, so it's difficult. But you have to focus what products you can sell. So for that, from a business perspective, you also need the much more attractive, much more. We have to be much more strategic. On the other end, I think China also needs to be a little bit more cooperative in terms of welcoming some of companies, Sri Lankan companies, Bangladesh or Indian, all these companies to sell in China. Because it's important to, work together on this and maybe it'll open the Chinese market much more and allow these companies to export there. So this is of course very easy for me to say theoretically, but realistically this is difficult, but it's also not impossible thing to do. I think that's where some other trade agreements or other forms of arrangements might help. But I think the key is having a frank discussion in terms of to what level both countries can liberalize from Chinese end and also from our ends. And the point there is uh, countries like Sri Lanka or Bangladesh cannot liberalize heavily at this
Mhm.
moment because we are not at the level of where China is. So if we liberalize heavily, that will affect our domestic industries, and there'll be severe political consequences of and social consequences of that. So that liberalization has to be gradual, but it has to happen, and through that we will be able to uh, export more to China. Of course, that's not easy, but I think still there is pathway to that by more strategic exports to China by focusing on particularly the growing upper middle class demand in China.
Right. The European Union is threatening retaliatory action on the US for these reciprocal tariffs. And they say that, they will negotiate something before the August 1st deadline. So that'll be something to watch. Do you think South Asian countries, whether individually or together, are in any position to do something like that? Or is it more or less that we have to play the US's game as of now?
No, not right now. Unfortunately, we don't have the kind of integration that we would wish to have. Definitely not at that level. Different countries has different incentives, different dynamics dealing with US. And I think right now the best course of action is to negotiate separately, try to get a deal for yourself and see what you can do. Because as I said, it is very unpredictable. No matter what you do, there is an element of surprise that will come in. Right. So you might be promising sun and moon to the US, but you might still end up with 25% tariff. I mean, that's still a possibility, right? So in that sense, best deal is you negotiate on your own, but have the work in the South Asian region to integrate separately, because we don't have the leverage, or we don't have the integration that the EU has right now. Right, that is a reality that we have to deal with, and that's something that we could and should work on in the future. But in terms of immediate solution, best way is to negotiate one on one and try to see what deal that you can secure. But always, keeping in mind that none of these deals could be sustainable, or none of these tariff changes is like permanent. It could change any moment. Yeah.
Umesh, the last question that I'd like to ask you is just like recommendations for further reading or listening or watching for our listeners. Could you recommend a book or even a movie or a podcast that people could listen to just understand the issue better?
I think one podcast to watch is the podcast done by Martin Wolf at Financial Times. He recently had few chats with former Nobel Prize winner Paul Krugman. So that's a one podcast to watch. Then I would also encourage anyone to read Michael Pettis. He has a book called Great Imbalancing that talks about the China-US trade and why it works this particular way. Because this whole thing is based on the fact that US has a high trade deficit, and US trying to address this issue. And even in a theoretical sense, it doesn't make sense to have trade balances with all the countries in the world. The world trade will balance. That's what the balance of payment actually implies. World trade will balance, but
Yeah.
that means you will have imbalances with each countries. And in this book, Michael Pettis explained how China's policies affect the US trade balance and vice versa, so on and so forth. So that's true. My major topic is to research on debt. There are many books that I would recommend on that.
So, what is your top recommendation on debt?
That's a good question. Okay, so there is a book called Dragon's Gift by Professor Deborah Brettingham. This is extensive work on Chinese lending to Africa, because there are a lot of misconceptions about it. So, right, so that is one. And then there is another book called When Debt Becomes the Devil, that is by a former Bank of England governor. And there is another book called Sovereign Debt and Vulnerabilities. This was written around 2002, a little old, but it's a really good book by Brad Sester and Noel Rubeni. Noel Rubeni, if you recall, is the one who predict the financial crisis. So those are like really solid books to read on the debt.
Great recommendations. Thank you so much, Umesh, and thank you for coming on the podcast today.
My pleasure, my pleasure, Nayantara. Thanks a lot for inviting me. It's a pleasure to be here. Thanks.
That was Umesh Moramudali on the State of South Asia podcast. If you like this episode, leave us a comment or write to us at editorial@himalmag.com. Tell us what you want to hear about on this podcast. Don't forget to tune in to the South Asia Review of Books podcast with Himal's Shweta Srikantan and our special podcast series, Partitions of the Heart, hosted by the peace activist Harsh Mandar. Follow the Himal South Asian podcast channel on your podcast app to find all our latest episodes, and you can share, rate, and review them. You can also sign up to our newsletters to keep up with Himal's work. This episode was edited by Ritika Chauhan. We'll be back soon with another in-depth conversation on the next episode of State of South Asia with me, Nayantara Narayanan. Thank you for listening, and see you then.